Raptis Real Estate. Welcome to another short. None of this is financial advice. Do your own research, like and retweet and share. It all helps with the algorithm. So we've seen 2 consecutive months of negative growth. It's all over the media at the moment that the market has certainly experienced a pullback. The numbers now that are out with Core Logic suggest that we've had -2%, I think -4% growth for the last 2 months. So it's not all doom and gloom. We've had 10% growth for the year in Adelaide, South Australia, which traditionally we've not seen double-digit growth, since that pandemic, the COVID-19 pandemic. And so I think, the sales don't have as much wind in them as they did, let's say 6 months ago. I think that the banks are certainly being a little bit bearish when it comes to lending, and their valuations are certainly not coming in as strong as what they were, let's say 3 months ago. And of course, this is off the back of another rate rise. For those that have got a mortgage, you certainly would have seen that your rate went up. There are talks of further rate rises, so certainly that's taken out the wind out of the sales, out of the investor market, homeowner market, small managed super funds. There's been a deadline there for people to purchase in their self-managed super funds. So I think that that's certainly been interesting. Not allowing people to buy in their self-managed super funds, which are heavily regulated, I don't agree with. For whether you like it or not, I think that if someone wants to buy a property in their self-managed super fund, they should be allowed to do that. Certainly some major issues there that we're seeing. Capital gains tax, as you've seen, nothing really as a catalyst as to why it should pull back the way that it has, other than the fear-mongering campaign. The budget is, there's still another budget to go, and it still hasn't passed through Parliament. So if you're thinking on the fence, or you're sitting on the fence thinking, should I sell, should I not? Well, quite frankly, I still think it's a very good time. 0.07% vacancy rate in rentals. The rental market's certainly very strong. So, if you're still wanting to buy an investment property, I think it's still a very good time. Adelaide, 4th most expensive capital city in Australia, and the average days on market around that 28 to 30 days. So overall, I'm still very bullish on the real estate market. I have been doing it for 20 years. We've seen these peaks, we've seen these troughs. Let's see what the next quarter brings. We've got spring just around the corner. Adelaide has its own little market, and then there's markets within markets. So overall, positive. Look forward to tuning in. We're kicking goals at Raptis Real Estate. Look forward to seeing you on the next one.